Hello and welcome to today's FatTel Daily video. Today I'm joined by our resources guru, James Cooper. How you doing, mate?
Good, thanks, Woody. Good to be back.
Yeah, well, you've also been recently going down the mines, haven't you? You went to a mine visit with Brian Chu, our gold guy. What did you make of
Yeah,
that to start with?
that's right. So we went to a small project. It's in Victoria. I won't detail the name of the company, but it's always good to get onto site and just see these projects firsthand, meet the team, look at the rocks. So for listeners that aren't familiar, I'm a geologist, so actually looking at the core is really useful. Now, we don't always do site visits before a recommendation, but we do always try to get out to these sites
Yeah.
as these companies sort of added to our portfolio. So
Yeah.
that's something we'll give the paid membership group sort of access to in future updates.
Yeah, well, it was quite a surprise to see you in. I wondered, oh, James is in the office. Oh, right. And that was why you were, because it was just up the road, wasn't it, this site visit? It was up the road from the FatTel HQ. But we got chatting about the copper story when you were in the office. And it's a lot to do with China. They've just hit the stimulus button, haven't they? And that has had a big effect on markets and commodities generally. Um, but part of the today's article in FatTel Daily is that you basically revealed a previous piece that you did for your paid membership, Diggers and Drillers, and you actually called this story pretty well in advance, didn't you?
So we actually told paid readers at Diggers and Drillers that back in sort of August, September, also we run two resource-based subscriptions, so Diggers and Drillers and Mining Phase One, which is
Yeah.
sort of your premium service. So we
Premium in and it goes down the risk scale, doesn't it? I should say up the risk
up,
scale.
up the risk scale,
Yeah,
so
yeah, yeah.
smaller stocks. So yeah, more risk, more volatility, but that's where potential larger gains comes
Yeah.
with that risk. So I was writing to both those groups about the opportunity in the market. There was a lot of bearish sentiment around China all through August and September. As listeners will probably remember, all through that time, iron ore stocks were being hit pretty hard. A lot
Yeah.
of like FMG was down sort of 40, almost 50% at one point. So just the narrative on China, the slowdown, the property market was really bearish. And I just saw this as a really good opportunity to build our positions. We didn't sell any stocks through that time. I think a lot of people were panicking, and this is why resource stocks were selling down hard. We resisted that, and we actually accumulated some more stocks during that phase. Now, we're not out of the woods yet. There was a big announcement from China just earlier this week,
Yeah.
a big stimulus package. It was the biggest since the sort of reopening of China after COVID in when was it? Early 2023.
Yeah.
And that was sort of as talked up as going to be the big moment for resource stocks. But that never eventuated. The stimulus sort of fell flat. And I think it's really interesting what our editorial director said this morning, Greg Canavan, about how the market is not really looking at this stimulus package as a sort of as an event to be excited like it was back in 2023. And this is sort of a sort of counter move that perhaps we should now be paying attention because the broader market isn't. So that's one of the sort of scenarios that we could see from this latest move.
Yeah, you mentioned in your piece that copper prices have been resilient despite the widespread concerns about China's economy. Uh, is there any other economic or geopolitical factors you think might be contributing to copper's strength specifically, just beyond the China situation?
Yeah, I think, well, copper especially is really important. I mean, people talk about Dr. Copper and
Yeah.
people have different interpretations of what that exactly means. But yeah, I'll touch on why we were looking at copper first up. And it is a really important market, and it has been for a long time, just for reading the broader resource sector. And as I was updating as I was writing to readers and to the paid readership group, we were looking at copper and it bottomed in early August. And this was when the sort of bearish narrative on China started to emerge. But because we saw copper bottoming and because copper prices were holding pretty resilient through that time and actually rising, I think up sort of 10 or 15% from those lows, despite iron ore falling, despite the resource market falling, and despite all this bearish narrative, copper prices were going up. So I think this was just an early signal for the market, for those sort of paying close attention, that maybe this sort of China narrative story was a little bit overblown in terms of the negativity. So this just gave us the confidence to hold our positions, and to accumulate some copper stocks through that phase. As I said, it's still early days, but we've already seen some good returns on those stocks that we purchased around those lows. And I think that's where you need to look at sort of these indicators in the market, like copper, what prices are doing. But yeah, in terms of broader issues with copper, so it's not just the China story; it's also about supply with copper. So there's been quite a bit made about the supply issue with copper, and I think that is valid. As an exploration geo, I see that at the coalface. I've worked with copper in Zambia and Australia, and there is a real lack of new discoveries. And you also have to consider that when a discovery is made, it's going to be at least sort of 20 years before that discovery actually enters production. And because we've seen a big lag over the last 10 years, there's not going to be any immediate supply coming into the market. So that really gives sort of a strength for copper prices as well. So good support in the market.
You also highlight the role of large institutional traders like the State Grid Corporation of China in driving the other side of the equation, which is copper demand. Sorry, I've got a fly buzzing around my head. How do you think the shift towards like things like renewable energy and electrification globally might impact these institutional buying patterns?
Yeah, so that really comes back to looking at the price action or the charts,
Yeah.
and that's something I was sharing with readers quite a lot through that really bearish phase, and showing them that copper was holding out. And you'd have to think, why was copper holding despite all this apparent negative news on China? And that goes back to these large institutional buyers that you mentioned, so the state utility company in China. And this is one of the world's largest buyers of copper. So these are the big players in the market which drive prices up or down. And the charts or the technical analysis gives you sort of an immediate recognition of what's happening in the market. It's not this sort of backward-looking data which might sort of come out sort of 2 or 3 months after the event. It's the beauty of looking at a chart. You're seeing this in real time. So that's what you want to be focused on, and that's what sort of gives you the strength to buy when most people are bearish in the market. So that's what I was sharing with readers, and I think that's starting to lift with the stimulus. I think maybe the market or the big buyers perhaps saw some bullish movements in the market in the future, so they were buying ahead of these events, and I think that's probably why copper has been resilient.
Is that an unusual strategy, an unusual mix of analysis? Because you're a geo, right? I just want to just get readers more familiar with your setup. So what is it usual for a geo to be interested in technical analysis too? Like how did you get that combo? Was it a hobby on the side of it as you were ticking the rocks?
Yeah, so I guess you look at geology and that's more your fundamental analysis, whereas charts and things like that, it's your technical analysis. So I suppose, it is kind of unique. So my career was rocks, geology, working for mining companies, whereas I guess my hobby for a long, long time has been investing for myself mostly, and really through that time, I've just been able to recognize the value of looking at charts. So being able to sort of correlate that with your sort of fundamental outlook. So understanding the geology and then combining that with charts. I think looking at charts is somewhat valuable when you're looking at specific companies. But where you get the best value, I think, is when you look at the commodities, so the big macro picture, and that's what we've been doing with copper over the last few weeks. And then you can sort of tie in the fundamental aspect by looking at specific companies which could match that macro outlook.
Yeah, right. So given, final question, James, given your bullish outlook on copper, how would you advise investors to balance their portfolios between established copper producers and more speculative exploration companies? Are there any particular subsectors within the copper industry that you find especially promising, given your answer to that first question?
Yeah, good question. So there's every possibility that people look back on August 2024 as the major sort of low for copper and copper stocks and a great buying opportunity. And that's not to say that there aren't more opportunities ahead. And I think there will be. And I think using any sort of market pullback from here will be sort of the strategy most investors should be using. So maybe accumulating a watch list of good stocks, producers, explorers, developers. Given explorers, if you have that risk appetite, I would be looking at companies already holding existing deposits. I think this is where you get the sort of best value risk proposition. So these companies are still sitting at rock bottom prices because they're junior mining stocks, but they hold known large resources sitting in the ground, which are potentially ripe for development or acquisition from a larger miner looking to sort of strengthen their copper portfolio. So that would be my primary focus in this market, because that's probably where you see the best value. And there's also no risk of holding one of these explorers who might not actually find anything. And that risk can actually mean that when copper prices go up, if this company's not finding anything, then it might not actually move up with that sort of sentiment, because it's got no immediate sort of leverage to the copper price.
There you go. Advice from the inside. Thanks, James. Much appreciated. If you found this discussion interesting like I did, do head over to our website where you can read James's Fat Tail Daily Piece today in full for free. Check it out. I provided a sign-up page as always as well. And we've just done a presentation too, which is based on the entire commodity sector. If you'd like to give that a check out too, I'll provide the link to that as well. James, thanks for your time, and I will speak to you again next week.
Absolute pleasure. Thank you, Woody. Cheers.